Nike shares get punched down, the chart looks rough, and the mood around the brand starts to feel like it's drifting from stoppable to stuck. Then a headline lands that makes even calm investors look up from their watch list. Apple's CEO, Tim Cook, just bought almost $3 million of Nike stock in the open market, right as Nike was trading around a 7-month low. That's the kind of move that instantly splits people into camps. One side says, insiders don't buy if the ship is sinking. The other side says, even smart people can buy too early. So let's slow the hype down, lock in the facts, and then translate what this actually means for investors who want to be right more often than they want to be loud. Here are the verified details. In reporting tied to an SEC Form 4 disclosure, Cook purchased 50,000 shares of Nike Class B at an average price of $58.97 on December 22, 2025, spending about $2.95 million. After that purchase, his Nike position rose to about 105,000 shares, which was valued near $6 million using the next day's trading levels around $60. The market reaction was immediate. Nike shares jumped roughly 4-5 as the news spread. And since you asked for up-to-date info, as of today, here's the intraday snapshot from December 24, 2025. Nike traded around $60.15 during the session, while Apple traded around $274.01. Today's tape also has a holiday wrinkle. U.S. markets close early at 1:00 p.m. Eastern on Christmas Eve, December 24, 2025, which can affect volume and volatility. Now, why does this purchase carry more weight than your typical insider-bought shares blip? Because Tim Cook isn't just a headline magnet. He has been on Nike's board since 2005 and has served as Nike's lead independent director since 2016. Lead independent director isn't a ceremonial title. It generally means deeper governance involvement, helping set board agendas, providing oversight when tough decisions are being made, and acting as a key accountability figure for shareholders when a company is under pressure. In other words, he's not running Nike's product line day to day, but he's close enough to the strategy and the internal reality that his actions can be read as a confidence vote in the direction of travel. And it wasn't a solo act. Another Nike director, Robert Swan, also bought shares around the same time at 691 shares at roughly $57.54, or about $500,000. One insider buy can be personal or symbolic. Multiple board members buying near the same price level, right after a sharp sell-off, starts to look like a cluster of conviction. It still doesn't guarantee the stock won't go lower, but it raises the odds that insiders believe expectations have gotten too pessimistic relative to what they think the company can deliver. Reuters added a detail that makes Cook's buy even more notable. It described his purchase as the largest open market stock purchase by a Nike executive or director in over a decade. So why was Nike near a 7-month low in the first place? Because Nike is trying to fix multiple moving pieces at once, protect brand heat, refresh product momentum, rebalance distribution, and defend margins, all in an environment where consumers are more price-sensitive and competitors are sharper. The latest quarterly report was mixed enough that it didn't disarm skeptics. In Nike's fiscal 2026 second quarter ended November 30, 2025, Nike reported revenue of $12.4 billion, up 1% reported. Wholesale revenue of $7.5 billion, up 8%. And Nike direct revenue of $4.6 billion, down 8%. Gross margin fell 300 basis points to 40.6%, and diluted EPS was $0.53. Those numbers basically tell you the story in one breath. Wholesale is recovering, but direct is shrinking, and margins got squeezed hard. That's exactly the sort of combination that can push a stock to multi-month lows, because the market worries that growth is being bought with discounting, or that the brand is losing pricing power, or that the channel strategy is still being rebuilt. This is where Nike's strategy pivot becomes the core narrative. Reuters described Nike CEO Elliott Hill's "Win Now" focus as reinvigorating marketing, accelerating innovation in running and sports, and repairing relationships with wholesalers like Dick's Sporting Goods. The wholesale piece matters because Nike's earlier push toward direct-to-consumer was designed to lift margins and deepen customer relationships, but it also reduced shelf presence in key retailers and created openings competitors could fill. If Nike is now rebuilding wholesale while trying to keep its premium brand positioning intact, that's a delicate balancing act. Get more product where customers shop, but don't train customers to wait for discounts. Now, let's translate Cook's purchase into what it really is, a high-signal data point, not an automatic investment thesis. The most common investor mistake with insider headlines is treating them like a guaranteed bottom call. But insiders can be early, and turnarounds can take longer than the market wants. So instead of asking, "Does this mean Nike is going to rip?" the smarter question is, what does this change about the probability distribution of outcomes? Insider buying, especially meaningful buying, can increase the probability that the stock is undervalued relative to insiders' expectations. It can also increase the probability that internal confidence is rising, but it does not remove the left tail risk that the turnaround stalls, that competition stays intense, or that margins remain pressured. The right way to use insider buying is as a filter. It can tell you the stock deserves a deeper look, and it can tell you that at least one informed person believes the risk-reward has improved. It cannot replace your own checklist. So here are the checklist questions that matter most now, and they're all testable over the next few quarters. First, is the channel reset working in quality, not just quantity? Wholesale up 8% is encouraging, but it can be healthy or unhealthy. Healthy wholesale growth looks like strong sell-through at partners, clean inventories, and less promotional intensity. Unhealthy wholesale growth can look like partners taking inventory only because discounts are deep, which can push short-term revenue up while keeping margins under pressure. Nike's 300 basis point gross margin decline is the warning light that quality needs watching closely. Second, can Nike Direct stabilize without damaging the brand? Nike Direct down 8% could be strategic Nike pulling back from tactics that inflated revenue but eroded premium positioning. Or it could be demand, meaning consumers are less engaged with Nike's Direct ecosystem. The difference is huge. If it's strategic, Direct can stabilize later with healthier margins. If it's demand, Nike might have to spend more on marketing and promotions to win back attention. Third, what's the path for Greater China? Nike's own release notes that growth in North America was partially offset by declines in Greater China and APLA. Nike doesn't need China booming every quarter to be a good company, but China has historically been a high-value growth engine for global brands. If China remains weak, Nike can still recover, but the recovery may be slower and the valuation multiple may stay compressed. Fourth, can Nike regain category leadership in the places that shape perception? Reuters highlighted running and sports innovation. That's not random. Running is a credibility category. If Nike wins there with undeniable product stories and marketing that feels culturally relevant, it tends to spill into lifestyle demand too, because athletic brands are narrative brands as much as they're apparel brands. Now, zoom out to sentiment, because Cook's purchase can move sentiment even before fundamentals move. Markets are social systems, narratives shape positioning, positioning shapes flows, and flows shape price. Nike's story lately has been turnaround, margin pressure, uncertain. A high-profile open market buy can inject credibility into the idea that the turnaround is real, and that can push investors from avoid to watch, or from watch to starter position. That helps explain why the stock jumped on the news, even though Nike's fundamentals didn't change in the last 24 hours. But don't confuse sentiment fuel with fundamental proof. Sentiment can spark a rally. Fundamentals are what keep it alive. And because the headline says, Apple CEO, let's be crystal clear about what this is not. It's not an Apple cash flow story. Nike is tiny relative to Apple's market cap, and Cook's personal trade doesn't change Apple's earnings. Apple's stock price today is its own ecosystem of drivers. The Apple label matters because it amplifies attention and credibility, not because Apple and Nike suddenly become financially linked. If anything, the Apple angle is behavioral, Tim Cook is not known for noisy, speculative market behavior, so a public open market buy of this size is more signal than shrug. Now, here's a clean framework investors can use going forward, whether you're bullish, bearish, or undecided. Think in 3 layers: brand, channel, and margin. Brand asks, are consumers excited enough to buy without deep discounts? Channel asks, is the product available where people shop, in the right mix of direct and wholesale, without diluting the brand? Margin asks, is Nike converting revenue into profit efficiently, or paying for sales through promotions and higher costs? Nike's latest quarter shows the channel layer shifting fast, wholesale up, direct down, while the margin layer is under pressure. A healthy turnaround sequence usually looks like this. Inventories and promotions calm down first. Gross margin stops falling next. Gross margin begins to recover after that, and only then does the market start paying up for operating leverage again. Stocks often reprice somewhere between promotions calming and margin stabilizing, because markets discount the future. That's where insider buying can matter. It suggests the board believes the sequence is achievable from here, even if the data takes time to confirm it. But we also have to talk about risk honestly. The biggest risk isn't that Nike disappears. The biggest risk is a long plateau. Revenue improves a bit, but margins stay pressured, promotions remain sticky, and the stock stays trapped in a valuation range. Another risk is competition. If rivals keep taking share in key categories, Nike may have to spend more on marketing and discounting, delaying margin recovery. And there's macro risk. Discretionary apparel and footwear can stay choppy when consumers trade down or delay purchases. If those risks dominate, Cook's buy can still be eventually, but painful in the meantime. On the upside, the payoff is also straightforward to understand. If Nike's channel reset sticks, if product innovation wins, if marketing reconnects, and if promotions cool, earnings power can improve meaningfully. Even partial gross margin recovery from 40.6% toward prior norms can move profit dollars a lot in a scale business like Nike. When earnings power improves while sentiment is still cautious, you can get a double tailwind. Earnings rise and the valuation multiple expands. That's how turnarounds can produce outsized returns, but only when the data starts confirming the story. So what should you watch after today's headline fades? Watch for further insider activity. Clusters matter. Watch management's language around promotions and inventory, the margin levers. Watch whether wholesale growth stays strong without turning into a clearance trap. Watch Greater China for stabilization signals. Watch product momentum, especially in performance categories, because product wins often show up in demand before they show up neatly in margins. And most importantly, match the trade to your time horizon. If you're short-term, you're trading sentiment and price action. If you're long-term, you're underwriting a multi-quarter turnaround, and you need patience plus a rules-based checklist. None of this is personal financial advice, but here's the clean takeaway to end on. Tim Cook's $3 million Nike purchase near a 7-month low is not a magic key, but it is a meaningful signal that a deeply connected, highly visible board leader is willing to put real money behind Nike's turnaround plan at a moment of skepticism. The stock's pop shows the market still cares about Nike's upside, but the long-term outcome will be decided by the next chapters in the data: channel health, brand momentum, and margin recovery, not by the headline itself.